Hey guys, welcome back to another video. So today in this video we're going to talk about trendline trading strategy. We're going to look at how you can spot a valid trend line and how you can spot if there's going to be a trendline breakout and how you can trade that trendline breakout in order to make some profit. Okay, so the first thing we're going to do is we're going to go through the method or the steps that you need to take in order to make sure that the trend is valid. Okay, you don't want to trade the invalid trend because it might give you loss instead of profit. So we're gonna go through the steps that you need to take to make sure that the trend is valid. Okay, after that we're gonna go through the trend line trading strategy and we're gonna show you how you can use that strategy in order to take the pinpoint entry and how you can use that in order to take profit and stop loss at different levels. So before proceeding, please make sure to subscribe to our channel so that you would be the first one to know whenever we upload new content. And also please stick around till the end of the video so that you can understand how this trendline trading strategy works. So let's get on with the video. So the first thing that we need to discuss is how you can spot a valid trend. Okay, every trend that you see in, or every trend line basically that you see in your charts is not tradable. Okay, you will be seeing the trend lines throughout the day, but not all of them are tradable. So you need to look for some key points. So let me go over the few key points that you need to keep in mind while looking for the valid trends. So the first thing for a valid trend is there should be at least 3 touches for a valid trend line. Let me show you what that means. So here we are on the chart, and this is basically a bullish market, market going on. And when we look at this, we can see some swings forming. So this is our first swing, this is our second swing, and this is our third swing, and here the breakout happened. So let me break this down and let me clarify what the 3 touches mean. So you can see this first swing, this is touching the trend line at 2 points. This is our first point and this is our second point, and this second swing is basically touching the trend line for the third time. So this is what we mean, that the trends or the candles should touch our trend line 3 times. There should be at least 3 touches, and then we can say that the trend line is valid. Okay, and here you can see that this is our first swing, this is second swing, and this is third swing. So once we spot these swings and we draw a line which touches the bottoms of these swings, we can say that this is a valid trend line. Okay, and it is also known as inclined support because there are basically 3 types of supports. The first one is the horizontal support, the second one is this inclined support, and the third one is the dynamic support, which is basically the moving average, on which we have made a separate video. So please also make sure to check that out. So this is our first point, that we need to clarify that at least 3 touches for valid trend. Okay, now the second point is the trend line should meet the swing points. So again, you can see that these are lows and highs of swing. Okay, so this is basically our lower low. Okay, and this is our higher high, this is our higher low, and again this is our higher high. So you can see the formation of these lower lows, higher lows, and higher highs, and the trend line should touch the lower lows in case of lower lows, or higher lows in case of a bullish trend. So here you can see this is our lower low and this is our higher low, and again this is our higher low. So our trend line is touching all these 3 points. So that's why we can say that this is a valid trend line. Okay, if there was a trend line which was not touching it and it was somewhere around here, you would see somewhere around here, so this is not a valid trend line. If it's a valid trend line only if it's touching the swings. Okay, the swing end points or swing points. Okay, the third thing that we need to keep in mind is trend lines should be less steep than 45-degree angle. Okay, so let me show you what that means. So most of times what people do, or what beginners basically do, is they think they spot a trend like this, a market going like this, and they think there's a formation of trend. Okay, which is not correct, because when we look at it, this is basically the formation of swing. Okay, and the swing is only halfway through yet, it's not complete. So this, you can see that this is our formation of half swing, and if you draw a line from here to here and say that this is a trend, it is not correct, because first thing, this is the formation of swing. The swing is only halfway through. Second thing is it's more steep than 45 degrees. So a valid trend lines you would see would be almost 45 degrees or even less. So it would be somewhere around here or even less. Okay, it should not go towards like 90 degrees, 70 degrees, or 60 degrees. Okay, so a valid trend line is only 45 degrees inclined or even less. All right, and let me go through the next point, which is basically that before the breakout there must be lower high and higher lows. So let me show you what that means. Here you can see that this is a bullish market going on and there is a breakout from bullish to bearish. So this is basically bearish trend reversal. Okay, so when we look for the bearish trend reversal, you can see the formation of these higher highs and higher lows. Okay, so this is our higher high formed here, and in from a trend reversing from bullish to bearish, there should be formation of lower high. Okay, so you can see this higher high. Okay, and if the trend could have gone here and it would have gone here, so there would have been another higher high, which would not indicate the trend reversal. So it would only indicate the trend reversal if there's a formation of lower high, which is at lower level, a high which is at lower level than the previous higher high. Okay, so from bullish to bearish, there was the formation of higher highs, but then there's a formation of lower high. Okay, that means that there's going to be a trend reversal. Okay, same is the case with bearish trend. Okay, there's a formation of lower lows, but when you can see that there's lower low, and again there's formation of lower low and lower low here. So when you spot a higher low formation during a trend line or at the continuation of trend, you see that the higher low is formed. That basically means that this is a sign that the trend reversal might happen. Okay, so you can see here that this is lower low and this is higher low. So this is indicating that the trend reversal might be taking place. Okay, and as you can see here, this is our inclined support in case of a bullish trend. Same is the case with the bearish trend. This acts as our inclined resistance. Okay, now the next thing is there should be a big candle breakout. So what that means is that when the trend reversal happens, let's say from bullish to bearish, there should be a big candle here which should be crossing the trend line. Okay, there should not be a pin bar or doji candle or hammer or hanging man. There should be no such candle which has very small body and very long wick. Okay, there should be a very long candle formation here in this area on the trend line, which is basically crossing the trend line. All right, so then it indicates that now something is going on in the market, which means that there is going to be a possibility of trend reversal. If you spot a doji here or a hammer or a hanging man, that doesn't mean that the trend is going to get reversed, because there is a formation of a candle which with the body which has more wick than its body. So there should be a long body formation here. Okay, and we're gonna see everything in the charts as well once we clear these 5 points. Okay, and again also with the bearish trend, there should be a formation of a big candle here in this area. Okay, there should not be a formation of the doji or any other small candle which has small body and big wick. Okay, there should not be a formation of that type of candle here. Okay, there should be a formation of a candle which has a longer body or big candle body, which indicates that the breakout is going to happen. The trend reversal is basically going to happen. Okay, the last point, but the most important point, is you should trade with trend. So when we look at it, let's say that you see this bearish trend going on. Okay, and if you think that there is a chance for a trend reversal, you should only look for it and validate that by trading with trend. So let me show you by here what I mean. So you can see the formation of a bullish trend. Okay, and then its breakout happening here. So if I want to trade this trend, what I should do is I should look for the trend inside the trading inside my trend. So I should go towards the time frame, and I should look at more candles. Okay, so you can see that there is formation of lower high and lower lows, which indicates that there is a continuation of a bearish trend from the bigger perspective or charts at higher time frame. Okay, you should look at a trend from here to here, so you can see that there is a bearish trend going on. So if I want to trade or predict that the bullish trend is going to get reversed, there is a higher possibility in this case if the trend is already going bearish in a longer time frame, or if we look at the more number of candles and it's going bearish, then that means that there is a higher possibility of the trend reversal. Okay, same is the case with bearish going bullish. Like if it was gonna go up, if it's going up and I spot a bearish trend which I think is gonna break out and gonna go towards bullish, and if I'm looking at it from the looking at higher number of candles, if I see a bullish trend going on, then there's a valid chance that the trend reversal is gonna happen. Okay, so I hope that these points that I discussed are clear. But if you have any questions, please stick around till the end of the video, because we're going to apply all these things that we have discussed onto our live chart. All right, so let me just go here and zoom in. One more thing, and one more very important thing that you should look for, is that the candle should not close below your trend line in case of a bullish trend. Okay, if there's a candle which closed below your trend line going on, that is not a valid trend. The wick can be below this trend line, but the candle cannot close below this trend line. And same is the case with the bearish trend, that the candle should not close above your trend line. Okay, there can be a formation of wick that is passing through this trend line, but a candle should not close above this trend line. So now let's go through the charts and see for a valid trend that we can take example as. Okay, so here you can see the formation of these three swings. Okay, and there's a formation of higher lows and higher highs, which means for now the trend is going bullish. Okay, and now I want to look for a trend reversal or trend line breakout. So here you can see that this is if we look at it and validate the points we discussed above, this trend line is touching our swings at the bottom here at these higher lows. Okay, which means that this is a valid trend. All right, so once we go here and we see that there's a formation of higher highs and higher lows, but here we see that there's a lower high formed. You can see that this higher high was formed and then there was a formation of lower high. All right, which means that the breakout is going to happen and there's a possibility of trend reversal from bullish to bearish. Okay, so you can see here the formation of lower high as we discussed above. This is one of the points of the trend line breakout strategies. Okay, so another thing that we should look for is that you can also spot a supply zone here, which is basically our rally base drop supply zone. Okay, so there's also formation of supply zone here, which you can see. This is another indication that the reversal is gonna happen, because after the supply zone the market goes down. Okay, there's more supply than demand basically. And you can also see the formation of this big candle which is closing below our trend line. Okay, so as we discussed in above points, that this big candle is closing below our trend line, and if there was a formation of doji or any other type of candle which has basically small body and long wick, we would not trade this. Okay, we would not look at it for as a valid setup for our trade. So now as you can see that it fulfills all our 5 points that we have discussed above, and this seems to be a valid setup for our trend line breakout strategy. Okay, the last point that we discussed was you should trade with trend. Okay, trend is your basically friend. So when I look at it from higher perspective, and I can see the formation of lower lows and lower highs, which means that a bearish trend is prevailing in the market. So this is a valid setup for taking some positions. Okay, so let me show you how you can take the pinpoint entries, okay, and how you can place your stop loss and take profits. So for that, what we're gonna do is we're gonna use the Fibonacci retracement. Okay, so what I'm gonna do is I'm gonna go ahead and get the Fibonacci retracement tool. So I need to start from this higher high and go towards this lower low or end of our swing. Okay, and this is again, this live formation is again in our golden zone, which is basically between 0.5 and 0.618. If you are not sure how Fibonacci retracement works, we have also made a separate video on that. Please go ahead and check that out. Okay, and there you can see that this supply zone is forming between our golden zone, which is a very good indication that the trend reversal is in place. Okay, and once we see that there is a possibility of trend line breakout from our trend line breakout points, and also there's a formation of supply zone, that is a very good trading setup that we can form. So we're gonna take positions here, and what we're gonna do is we're gonna put our stop loss at just above our supply zone. Okay, so what we can do is we can put it above our supply zone, or we can also put it at this level, at basically our 0.786 level. Okay, so let me go ahead and take short position here, and we can put our stop loss at this level, and we can put our take profit at the higher low of our previous higher low of our last swing. Okay, so this was our last swing, so we are going to put basically two take profits. Okay, so let's say if we opened two lots, then we're gonna sell our first lot and take profit as soon as it reaches the higher low of our last swing that is breaking out, okay, in our trend. So we're gonna put our close our half trade at this level, and in order to predict where the market is going to go next, what we need to do is we need to use the Fibonacci extensions. Okay, so let me go ahead and get the Fibonacci, and what we need to do here is we need to look at it from, we need to start from here, from the start of our trend, and go towards the higher high of our trend. Okay, this level here. So we can put our second take profit at this level, basically this level, which you can see was hit at this level here. So from here you can see how you can place your stop loss and take profit and take the pinpoint entry on a trend line breakout strategy. So let me just repeat everything that we have discussed in this video. Okay, so first thing we discussed was how you can spot a valid trend. Okay, there are basically the 5 steps that you need to remember, that at least 3 touches for a valid trend, like the swing should touch at least 3 times for the swing end point should touch the trend line for a valid trend line. Okay, so here you can see this is our first one, this is our second one, and this is the third one. So this is our valid trend line. Okay, the second one was trend line should meet the swing points, which it is. Here you can see at this point. Okay, these are all meeting our trend line. The third point was trend line should be less steep than 45 degree. So these are less than 45 degree or almost 45 degree. It should be not be higher than 45 degree, but it can be close to 45 degree or even below. Okay, that would be a valid trend line. And the fourth point is before breakout there must be a lower high or higher low. Okay, so if the trend is gonna get reversed from or break out from bullish to bearish, there should be formation of lower high. But if it's gonna break out from bearish to bullish, there should be a formation of higher low. Okay, and then there should be a big candle breakout. So as we saw here that there was a formation of big candle at this level where the breakout started to happen. Okay, and the last point was you should always trade with trend. Okay, and here we can see the setup that we have discussed in order to take your positions and in order to validate what we have discussed above to spot a valid trend and to take our positions and put our stop loss and take profit. So I hope you liked this video. If you have any questions, please comment down below and I would love to answer them. Also, please make sure to subscribe to our channel so that you would be the first one to know whenever we upload new content. You can also visit our website www.forexbee.co in order to learn more about price action and forex. See you guys in the next video. Thank you.